Hello everyone. We're discussing investors' perspective on the current Dubai real market scenario and what's ahead. Short answer is still bullish, but smarter investing is required. Dubai real estate is no longer a buy anything and it goes up market. It's becoming a selective investors market, which is actually healthier. What investors should be seeing right now? Market is cooling but not crashing. After record growth, Dubai is moving into a normalization phase. Price growth is slowing to a more sustainable pace, roughly 4 to 7% annual appreciation expected in many segments. Rental growth is flattening in some areas, buyers are becoming more selective, investors meaning this removes speculative noise and creates better entry points for everyone who's involved. Offline is still dominant, but choose carefully. Offline remains a major driver of transactions, supported by flexible payment plans and lower entry prices. Opportunity which exists right now is lower upfront capital, potential appreciation before handover still existing, better leverage with 50/50 or post-handover payment plans. Risk, what we have right now is some 2026 handovers are being pushed into 2027 due to construction delays linked to regional supply chain pressures. Investors' takeaways are prioritize Tier 1 developers, Emaar, Nakheel, Sobha, Miras, etc. over smaller names. Dubai's fundamentals remain very strong. You have to understand why investors still trust Dubai. Population growth and ongoing expatriate inflow, golden visa and investor-friendly regulations, massive infrastructure upgrades, airport, road, urban clusters, strong government confidence. Dubai Holding just increased its stake in Emaar by $6.5 billion, signaling long-term conviction. This is not just market optimism, it's structural support. Well, what we're looking at now is the market is splitting into winners and losers. Not all areas will perform equally. Some of the areas which I likely see as winners are going to be Dubai South, the premium waterfront areas, what we have, possibly Rashid Yatsen Marina, and JVC Narjan I see as coming for good yield driven localities still. Communities with strong connectivity are definitely going to make money for everyone. Potential pressure zones, areas with heavy new supply and weaker differentiation. Some part of Business Bay and JVC may see the yield pressure on this. Future outlook for next 12 to 24 months. Scenario 1, smart growth, most likely moderate price appreciation, stable rental yields, strong foreign investor demand is still visible, better opportunities for disciplined buyers, definitely. Scenario 2, temporary softness, regional geopolitical uncertainty may slow decision making or delay projects, but major developers remain resilient. Scenario 3, long-term upside, Dubai's D33 economic agenda, infrastructure build-out, and global positioning continue to support long-term property demand. This is something, as an investor, you should always have your focus on. What I would advise a Dubai investor today, buy if you want capital preservation in a global city, 5 to 8% of rental yields, long-term AED USD linked asset exposure, flexible payment plans. Be cautious if you are expecting quick flips, buying purely on hype, choosing unknown developers, ignoring supply timing. Thank you so much for having a listen. I've